you doing, brother? Thank you so much for joining me today in this special news segment we're launching to our audience. How you doing?
I'm very well, mate. I'm very well. Hello from London. Thank you for having me. I'm excited to get my teeth into LATAM a little bit more. I spend far too much time moaning and groaning that there's no volatility in the G10 FX market that I usually cover. So hopefully we can find some life down in Latin America for us to talk about. But yeah, keen to get stuck in.
I gotta tell you, definitely we have had that period of low volatility, but the FX market within the Latin regional sphere has been quite interestingly recently. And yeah, I'm so happy to be here with you to take, a look at all the main dynamics. So I wanted to kick in real quick, taking a look at what's been happening within the region. And definitely, we can say that the FX market has overall behaved in a kind of positive tone within the LATAM sphere. Here we can see that the Colombian peso has been the leader, followed by the mighty peso, super peso. It for sure has, acquired in some sort of degree that title. Mainly, if later on we'll get to take a look into the chart that it's, portraying the dynamic of the Mexican peso against the US dollar, and yeah, followed by a couple of other positively performance for the month of May. The only one that overall, or generally speaking, has had a negative performance is the Argentinian peso, which, as we can tell from this table, it's been heavy lager in the region. I don't know if you want to throw any comment with regards to what you're seeing here.
I was just going to say, the Argentinian peso is a totally different beast. The Argentinian central bank making the Bank of England look competent at this point, to be quite honest. You've got ridiculously high, rampant inflation. Real GDP growth is clearly going to be abysmal. The currency, as we were talking about before we hit record, is quite rightly just getting chewed up across the board. But I think when you look at that board, a little bit more kind of holistically, it is really mirroring the broader theme that we see, which is actually quite a risk-on one. May has been a pretty positive month for risk assets, and unsurprisingly, you see that represented across the FX leaderboard. Equities have rallied quite strongly. I guess the surprising thing is perhaps the resilience of some of these currencies, because we have seen quite a chunky dollar rebound in the month of May, but the Mexican peso, the Colombian peso, they've held up all right.
No, totally agree. Definitely. Because there's been periods where you could say, even though that, position has been more lean more towards the risk on dynamics, there's been periods where it's been a risk aversion dynamic in the markets. And even then, the Mexican peso has held pretty consistently, pretty good against the US dollar. Definitely in some sort of way, which kind of like helps, or has been helping a lot. The Mexican currency has been the difference in the interest rates, the yields that have been all these currencies being provided against the US dollar. But no, completely agree with you. We could, in an overall manner, say that it's a risk-on position, if you will. We're going to take a quick look now to the chart that portrays the dynamic.
That is just ridiculous, isn't it?
Here, I think this can make an example for us to clarify and make an importance mark to the dynamics of inflation. When you get inflation out of the hook, this is what ends up happening. And we can clearly tell by the behavior of the Argentinian peso that, once that inflation is out of control, it's a no joke to your economy, to your way of conducting business in the global sphere, if you will. I don't know if you want to add anything to this interesting chart,
absolutely.
If you will.
It speaks for itself, really. If you mismanage your economy to that degree, clearly the market is going to punish you. But again, I think it comes back to what we were saying. It's actually, if you look at that chart, it's a remarkable resilience seen in a lot of these Latin American currencies in the face of what has been a stronger dollar for the majority of the year. And I think that's quite surprising, particularly if you look at the G10 universe that I'm familiar with. You would see almost the sort of polar opposite of what you see on this chart here. And I think that's quite an interesting opportunity for traders to exploit, particularly when you view that through the lens. There you go. See what I did there, getting the title of the show in. If you view that through the lens of the Fed coming very, very close to the end, if not having already reached the end of their rate rise, their hiking cycle, then, where does that leave Latin American currencies looking ahead into the second half of the year? Are they perhaps primed to outperform a little bit compared to other geographies?
Completely agree. And yeah, definitely one key factor to take into consideration here is the resilience, because look at it. Putting aside the Argentinian peso, of course, they have all had a positive performance throughout this year. Of course, there's been periods where I think the Brazilian real has, entered negative territory against the US dollar, but overall after that, or putting that aside, it's been one where, the LATAM currencies have outperformed the US dollar for 2023.
Yeah, absolutely. And of course, sorry, just to jump in there's a few idiosyncrasies when you look at Brazil. There's been a fair bit of political upheaval. The market is not particularly optimistic in terms of particularly the public debt position in Brazil. That is becoming more of a worrying theme. And perhaps that's something that's been weighing on the real over the early part of the year. But as you say, by and large, it is that resilience again shining through.
Completely. I wanted to jump now to kind of like setting up the basis for how I personally think it's important to navigate whenever we go into take into consideration emerging market currencies. And I think the primary factor, and I'm going to actually ask you a very interesting question with these regards, definitely emerging market currencies are heavily dependent on where we are within the economic cycle. Usually, given their dependence on exports, they tend to navigate positively when we're coming into a recovery expansion type of environment, whereas when we enter risk aversion, recession, contraction, depression, of course, it will be one where you have a more for a prolonged period of time in a more aggravated manner in terms of economic downturn. Nonetheless, I think it is heavily dependent on where we are, once again, just primarily because of how they depend on their exports and raw materials. So having said that, and taking into consideration where this, or majority, of course, with the exception of the Argentinian peso, them all performing in a pretty good manner, where will you say, Michael, that we are here within the economic cycle? Are we peaking? Are we already coming to that position where we're heading to a little bit of a contraction, recession?
I knew you were going to.
The performance, we'll say we're at the peak. We're in expansion peak type of.
You're absolutely right. Yeah, when you sent me these slides a little bit earlier on, a couple of hours before we hit record, I knew you were going to ask me this, and I was kind of dreading this question because I don't think anyone really knows. And I don't think the data that we're getting coming in really helps to clarify this. If you look at, obviously everyone looks at the US, and I do primarily as well, but if you look at the economy more broadly, this applies to pretty much everywhere. The services sector is going gangbusters. Just speaking from experience here in the city and also around the UK, restaurants are heaving, bars are heaving, people are desperate to go out and spend in the services economy. And you see that coming through in things like the PMI numbers. The services PMI pretty much everywhere is well above 50, 54, 55, really, really solid rate of expansion. So if you look at that on its own, you say, well, the economy is doing great. But then you look at the manufacturing sector and it's pretty much the opposite story. New manufacturing orders are on the floor. Industrial production is rolling over quite significantly. The manufacturing PMI gauges have been well below 50, which obviously is the barrier between territory. Expansion and contraction. It's been well below 50 for quite some time. So I think you've almost got what I would refer to as a kind of two-speed economy. You've got an economy where the services sector is doing very, very well. And of course, it is services prices actually that are propping up those inflation gauges. And then you've got a manufacturing sector that is significantly underperforming. And I think when you view that in the context of your next slide, which I know you're going to run through and you gave us a very quick sneak peek of a moment ago, look at what those economies are exporting. And I'll let you talk to this in a second. They are all organic raw materials that are used in the manufacturing sector. If you're in a manufacturing slowdown, what does that mean for those economies? What does that mean for those currencies?
I think you nailed it. I think that's the right point to make here. And one of the ones that, and we'll go over the charts themselves with each of these individual, or maybe not all of them, but a couple of the most relevant. I feel like the Chilean peso with copper, Mexican peso having some dependence to crude oil. As you mentioned they are all depending on those raw materials that are the main basis for the manufacturing process. And the PMIs, you mentioned it, like just last week, we saw Germany putting on a very negative PMI. So I think that it's one of those dynamics that hasn't been fully translated yet to the impacts that all these economies are going to be feeling, but seems like we are kind of like this ship is navigating, it's steering that way. Before we go into that in depth and looking at each individual exports and what do all these countries export, of course we are taking into consideration all these currencies against the dollar. And the question that I want to ask you here, which probably is going to be a complex one, is, in theory, we had paused. In theory, we had already reached that level. Markets are now theoretically pricing one more hike. There's still a window for one rate cut for the US dollar. Where do you see things taking place for the US dollar? Because once again, what happens with the dollar, it does have an impact on how all these currencies behave.
No, absolutely. It's an interesting one because earlier in the year and also for much of last year, everyone was talking about a Fed pivot, i.e. they'd go from hawkish to dovish. Then everyone started talking about a Fed pause, which is what we thought we got at the last FOMC at the start of May. But now everyone is starting to talk about, and this analogy is just laughable, a Fed skip, where they would stay on hold in June, but then raise rates again in July. Now, if you ask me, I don't really see the point of that. You're not going to learn anything in a month that you wouldn't otherwise know. You may as well just carry on regardless. But that's slightly beside the point. What we've seen of late is a really big hawkish repricing in the market, as you rightly alluded to. At one point when Silicon Valley Bank and all of the regional banks were facing big issues in the US, the market was pricing about 100 basis points worth of cuts from the Fed in the second half of the year. When I checked earlier on Bloomberg, that was at six basis points. So pretty much all of that has been priced out. So that is what has fundamentally fueled this big rebound in the dollar from 101, just below 101-ish on the dollar index, to north of 104. The question now is, that narrative has kind of run its course. What's next to push the dollar higher? And I think what the next upside catalyst could be is if we get back to this idea of US exceptionalism. The UK is I was very, very close to swearing. They're an absolute shambles at the moment. Let's put it that way. I've got to be politically correct. Europe is not looking as rosy as it did at the start of the year, and China as well. The reopening narrative seems to have run its course, and some of the activity data coming out of China is starting to look pretty soft indeed. So I think if we are going to see the dollar continue to move higher, which is my base case, it is going to be back to this idea of the dollar is the best of a bad bunch. There isn't much growth anywhere else. There's high inflation everywhere else. The US is doing better than that. So I think the dollar is going to enjoy a positive spell for some time to come.
Totally. one thing, and I think it's important to match, of course. All right, well, now we are not taking into consideration that, which I personally feel it's the right thing to do, primarily considering inflation, core inflation is still above 5%, at least here in the US. I mean, that's not a situation, that's not a scenario where you should be thinking already cutting interest rates. However, it's not a just one side type of dynamic. We also have what is happening on these countries. And so far, taking into consider the representation of the Mexican peso, the Banxico is not so far planning to have rate cuts during this year. So that case, that scenario, in theory, of course, will maintain that positive differential that has, keep on making very attractive the Mexican peso. I've been a believer in the sense that as long as we don't have a major economic impact or dynamic where we are more heavily already seeing negative economic prints, everybody's gonna keep on taking the benefits of having that very attractive yield. Like at least that's how I feel. I don't know how you feel with regards of actually just taking the FX market benefit of the yield. And I mean, if it's there,
absolutely,
take advantage.
You're
of
definitely seeing the carry trade come back, and I think when you are and carry, we could do a whole separate video on carry trades. I'm not going to get into it too much now, but you've got to think about the real yield. And actually, real yield is obviously nominal adjusted for inflation. In the US are still, zero, relatively low, maybe even negative in certain parts of the curve. In Mexico, although the bank, you can say it better than I can, the central bank there have effectively gone on pause and they may cut later this year, you've still got much higher real rates than you do in the US, which is, again, a reason to look for that carry position.
So let's take a quick look to the main experts, because I think from future occasions, whenever we jump back into the microphone, we're gonna have to take into consideration, okay, what's in copper doing, what's oil doing, what's natural gas doing, what's meat doing. As a quick reference, Argentina, corn, soybean; Brazil, iron ore, soybeans, petroleum, crude; Chile, copper. It's a very big one with regards of copper. Colombia, coffee. It's very known for that one. Coal is there. Oil, crude oil as well. Mexico, you could say that it's the manufacturing hub of the region in that some sort of sense, which is, I'm actually going to open a very interesting point with regards to this, with the whole fragmentation thesis in which some of the manufacturer companies are going to be taking their manufacturing side of things to more friendly economies. That should be a positive one for Mexico. I don't know. I'm just going to continue with the list and then I'll pass back the mic to you. But Peru, ores, gems, fruits; Uruguay, bovine meat, chemicals, and milk. What do you think about the fragmentation dynamic, and how could that potentially help Mexico as the manufacturing hub for the West?
Yeah, it's one of those that's really interesting from I've got a curious macro geopolitical mind and want to get into it. The problem with it is it's one of those themes that will play out over too long a period for it actually to be actionable, I think. The thing is, it is, and it's the word escapes me. Can you tell it's been a long day here in London? Friendly shoring, that's what it's being called. And it's this idea of moving, and it's been coming about since the trade wars that Trump started. And it's this idea of taking your supply chains and your manufacturing away from places like China, for instance, and into what are friendly countries. And obviously, if you're a US auto manufacturer, for example, Mexico is a pretty good option if you want to be doing that. But it's happening across the globe and it's happening across sectors. I think one of the best examples is probably Apple. If you look, and I haven't got the exact numbers on it, forgive me, but if you look at iPhone production, you can go and Google it. Look at the proportion of iPhones that were made in China, 3 years ago, probably including this one here. Compare that to the proportion of iPhones that are made in China now. it's absolutely tiny because they've moved all their manufacturing to places like India, Vietnam, etc. And it is a growing trend, and it is going to provide an economic boost to those countries, and over the longer term, boost exports, boost their competitiveness, and you would expect perhaps even boost their currencies as well. But I think in the short term, it's not something that you can really trade off.
Trade it. Speaking of trading, let's go start putting some things down, putting some levels. I am a personally fan, if you will, of the price dynamic of all the different things that happen in the markets. And when we get to take a look into the Mexican peso, which from all of the ones that we're going to be taking here just to close or to wrap up this LATAM Lens, it's one that has the clearest technical setup. And as you can see, the psychological level of 18 pesos per dollar, was the one holding the advancement of the Mexican peso. Nonetheless, it has broken, and with the effect of polarity now has kept Mexican peso's behavior on the positive note. We have to definitely, and especially with the behavior that has been shown from the super peso, take into consideration a more bigger time frame. In here we have the 17.5 as the support level that it's gonna be of high relevance for the upcoming weeks. And this is personally one that I'm actually gonna, it kind of goes back to what we were talking about. The carry is good. Mexican peso looks attractive. Nonetheless, knowing where we're heading, for me personally, there might be some additional potential for these currencies, but then I also bring into the question, hey, seems like the economy is deteriorating. Is this the right place to be? And then I'm kind of like, I don't know if we could potentially see more upside for the FX, LATAM FX space. I don't know if you want to add anything before I jump back to.
Yeah, I was going to say, if you can just bring your chart up again a second. I think the other thing that you've got to consider is we've come a hell of a long way in a relatively short space of time. Not just that move from the peak during the kind of COVID period, but even over this year and last year, we've fallen from. Forgive me, my eyesight is failing me here.
We're talking about more than 10%.
As you say, a 10% move is a huge move with no real period of consolidation, which, yes, it's becoming a kind of momentum play, and it's clear which way that momentum is at the moment. But a market can't move in one way forever. And when you get to a big level like this 17.5, you can see its support from back in 2017, I think that is on your chart there.
Very good.
But it's also a psychological level as well. And you just start to wonder, is this the level where you're going to see some of those peso bulls take a bit of profit, lock in, take a bit of risk off the table, and actually we go sideways for a brief period of time? And if we do, it's no bad thing, because it's not healthy for a market to run in one direction forever. You need these pauses, you need these pullbacks. And also, if you're a trader, it gives you a better level at which you can then take a bit of your own risk off the table and then re-enter the trade if we continue to move lower, if we get, for instance, a closing break at that 17.5 level.
100%. Just in case I'm on the wrong side of the perspective, and actually, indeed, the Mexican peso continues with this super strong trend, 15.90 is probably the next level to take into consideration. And we were joking about how this chart is actually, it has a representation of Michael's lifespan here.
It is.
This just for you guys to consider. It's a long chart. It's not that one dynamic that is going to play out here in the next couple of days, right? But just in case this happens to be invalidated as a general support area, the next big support level of relevance doesn't come very deep into the 15, approximately the 16, let's just call it 16, the 16 level, which is a substantial. We're talking about an additional 10% of positive movement for the Mexican peso. Nonetheless, that will be the case. Definitely, this is a strong support level from an overall area sense, just because in here we also have the Fibonacci retracement of 50% coming from the upside movement that took place from the lows of 2008. That's a wrap for the Mexican peso. Definitely the next one that we're going to take into consideration is going to be the Chilean peso, just primarily because it's another technical configuration that I think it's very clean. And in this, you can see that as well as the Mexican peso, it has had a very positive behavior overall compared to the United States dollar. And in this one, I personally believe, and I'd love to hear your thoughts on this one. Yeah, we took a pause right here on the support level that came right on the lows of March last year. Nonetheless, it gives me the impression that we're gonna be continuing in favor of the Chilean peso, heading kind of towards that upside trend line coming from the lows of March of 2018. And here's where my fundamental view and kind of like knowing where it feels like we are within the economic cycle, I feel like it's going to be a hard one to invalidate to the downside. I don't know if you want to add anything here with regards to the Chilean peso.
I think you've nailed it there. I think the only thing I would say is, and this is a bit clearer on a daily chart than on a weekly chart, is we've pretty much been stuck. There you go. Between 775, 770 to the downside and kind of 828, 25 to the upside. You could argue there's a little bit of a kind of downtrend going on, but I think it's a waiting game. It's really a game of patience. Which one of those levels breaks first? Does it hold on a closing basis? Do we confirm that break? And if it does, then go with it.
Lastly, but not least, we got to take into consideration the Brazilian real. And here, this is an interesting one because when we get to see the behavior of this technical pattern, it looks like a wedge. For those that aren't that much familiar with what this technical setup represents, is one where you're continuing to see lower lows and lower highs. Nonetheless, the lows aren't really making much or gaining much ground, and this dynamic tends to favor the contrary part of this dynamic. Of course, if the bears aren't really taking any much movement to the downside, at some point that lack of capacity is gonna translate into the bulls taking hold. Seems like in this case the Brazilian real is not that posed to keep on benefiting, and if anything, it looks like we're heading towards that resistance level from the wedge. I don't know if you want to add anything to this one.
No, I think you're right. Again, I think that support is around sort of 480-ish, the lows that we've put in recently. That looks very, very strong indeed. So it does feel like we could be kind of gunning for a test of that upside resistance, and we'll see whether the market stalls out there and comes back into the range, into the wedge, or whether we can get a break above. I mean, we've been in there for 6 months or so now, so it would be nice to get a break above just so we get a little bit of a volatility impetus back into the price.
Awesome. All right, brother. Well, with this, we will be making up our wrap for LATAM Lens. It's been a pleasure to be here on this segment with you for the first time, and definitely looking forward to continue on putting a perspective of what's happening. And you'll guys see once that we continue on doing the research and establishing the dynamics for the region, we're kind of like be able to elaborate more on how things are taking place and what's been happening in the LATAM FX realm.
No, absolutely. Thank you very much for having me, mate, and look forward to doing it again soon.
Thank you all. Have a good one. Bye-bye.